Today we're going to step back from the day-to-day price moves and look at the bigger picture, the evolving relationship between retail investors, big institutions, and Opendoor as we head into the final quarter of the year. Over the weekend, Eric Jackson posted his impassioned Rising Dynasty message outside Drake's house. Eric Trump gave an interview to the New York Post highlighting retail activism. And Kaz Nejatian dropped a tantalizing tweet about top-tier tech talent joining Opendoor. Taken together, these moments reveal a story that's bigger than one stock chart. It's about a potential shift in who drives the narrative and the returns. The past few weeks have been dramatic for Opendoor. A surge on Jane Street's 5.9% stake disclosure, headlines about Lena's exposure, and 2 days of double-digit gains had everyone's eyes on Dollar Open. But while price action cooled Friday and in the aftermarket, something else was happening online. Eric Jackson, one of the earliest vocal bulls on Opendoor, was speaking directly to retail investors, not in the dry language of Wall Street but with an emotional pitch about breaking out of the middle class. He described retail as a rising dynasty, people who refuse to accept being locked into ETFs that deliver slow, low-alpha returns for the benefit of fund managers. Instead, they're hunting for asymmetric plays, one or two breakout stocks that can change their trajectory. This is more than stock picking, it's about agency, empowerment, and financial self-determination. And that theme resonates deeply, because over the past decade, retail has gained the tools once reserved for institutions: zero-commission trading, fractional shares, real-time data. The GameStop saga in 2021 showed that a coordinated retail community could push back against short sellers, at least temporarily. Now, with Opendoor, the pitch isn't about a meme, it's about a business model and a potential housing market-powered turnaround. On the institutional side, Jane Street's disclosure of a 44 million share stake, about 5.9% of the company, is perhaps the most telling signal yet. Jane Street is not a traditional activist hedge fund. It's a quantitative trading powerhouse, famous for high frequency, market making, and capturing microspreads, not for taking big, directional bets. So why accumulate such a large, reportable stake? The simplest explanation: they see value. Their models likely ingested millions of data points about Opendoor's balance sheet, iBuying volumes, regional housing trends, and the impact of AI on transaction margins. In other words, the same data-driven approach that helped them dominate ETF arbitrage and crypto liquidity is now telling them that Opendoor's risk-reward is skewed to the upside. For retail investors watching from the sidelines, that's validating. The same firm accused of looting Indian traders through sophisticated arbitrage is now shoulder-to-shoulder with them in Dollar Open. Whether you view Jane Street as villain or savior, their stake is a tacit endorsement of Opendoor's potential. And it creates a fascinating alignment: retail conviction meets quant conviction. Adding to the weekend narrative, Eric Trump name-dropped Opendoor and retail activism in his New York Post interview. He was speaking in a broader crypto and financial freedom context, but the symbolism matters. A member of America's most famous business political family linking retail investors with a kind of populist, disruptive energy. This isn't an endorsement of any one stock, but it's a signal that the mainstream is noticing the retail institutional dynamic in names like Opendoor, BETR, CIFR, and IREN. The idea of everyday investors bypassing traditional gatekeepers to back companies they believe in, whether through equities, crypto, or tokenized assets, fits perfectly with the narrative of decentralization and parallel economies. For your audience, weaving Eric Trump's comments into the story shows that the rising dynasty message isn't just echoing in small online forums. It's seeping into national media, politics, and big money conversations about the future of finance. Then there's Kaz. In one tweet, he hinted at insanely awesome talent leaving big tech companies to join Opendoor because they believe home ownership matters. That's a big deal. Top engineers and product leaders don't jump ship lightly. When they do, they're often chasing a mission they think can scale. For Opendoor, which has already been experimenting with AI-driven pricing and transaction automation, this influx of talent could accelerate innovation, new products, faster rollouts, smarter risk models. We already saw Kaz hint that a new product might launch in one market next week, possibly Texas. If Opendoor is quietly assembling a dream team of real estate and tech talent, it's a bullish leading indicator for long-term competitiveness. Put these threads together and you have a fascinating setup for the last quarter of the year. On one side, you have retail investors inspired by Eric Jackson's rising dynasty vision, hardened by months of volatility, and emboldened by seeing mainstream names talk about their movement. On the other, you have a sophisticated quant shop like Jane Street building a large stake, plus a CEO tweeting about star hires and imminent product launches. This is no longer a simple David versus Goliath story. It's more like a coalition, retail and a certain class of data-driven institutional investor converging on a contrarian thesis. And if Opendoor delivers operationally, executing on AI-powered iBuying, expanding its marketplace, and capturing a resurgent housing cycle, the narrative could flip from battered tech real estate play to case study in retail institutional synergy. Even if viewers don't own Open, this weekend's developments highlight a broader trend: the democratization of capital allocation. Tokenization of real estate, as Eric Trump speculated, might be years away, but the ethos is already here. Retail wants direct exposure, not intermediated exposure. They want to back missions, not just tickers. And companies like Opendoor that can frame themselves as mission-driven disruptors, not just transactional platforms, may have a structural advantage in attracting both talent and stickier shareholder bases. That can translate into more patient capital, less dilution pressure, and a stronger narrative during macro volatility. So, as we head into Monday's pre-market, here's what matters more than the after-hours tick. Does Kaz's hinted-at product launch materialize this week, and in which market? Do we see confirmation of additional institutional buying blocks, the 200,000 share print spotted Thursday? Does Eric Jackson's rising Dynasty message bring new retail participants into Open or related names like BETR, CIFR, IREN? Does the mainstream press pick up Eric Trump's remarks and extend the conversation about retail activism? If even some of these catalysts line up, we could be looking at a unique Q4 test case. Can a company with a contrarian business model, backed by retail conviction and quant-driven institutional capital, execute its way into a breakout narrative? For the OpenArmy, well done weathering the storm. This week was volatile but also validating. You've seen one of the world's biggest quant firms take a seat at the table, you've seen mainstream voices talk about your movement, and you've seen your CEO hint at top-tier talent and new products. That's not noise, that's signal. As always, this channel will keep tracking not just the ticker but the bigger story, the interplay between retail investors, institutional players, and the mission of building a better way to buy and sell homes. Stay tuned, because Q4 is shaping up to be a very interesting chapter.